It's almost a year since copper company Quadra Mining completed its merger with FNX Mining. The new company's earnings for 2010 soared above previous years, somewhat helped by a fairly steady climb in copper prices. Almost 40% of the copper that comes out of the ground makes its way to China, but there are some concerns that China's demand for copper has maxed out. Others believe Quadra FNX is an undervalued company that deserves a close look. Peter Puccetti is the chairman and chief investment officer at Goodwood. Thanks for coming in.
Thank you.
And let's start with where you stand on the company and why.
Well, we're always looking for ways to play catch-up, if you will, with the hot resource sector. So it's always fascinating to us when you can find a name, and in this case a pretty liquid name. It's about a $2.8 billion market cap, so it trades well. A name that has lagged the rest of the group. And so in Quadra's case, you've got a company that, due to a series of missed guidance 3 times in a row over the last year, the stock is trading at a noticeable discount to the group average. On average, the group is trading at about 4.5 or 5 times this year's EV to EBITDA, and Quadra's probably around 2.7. So it's a huge discount for a pretty liquid stock.
So Quadra is a glaring example of a phenomenon that many investors look at regarding investing in commodities, and it's this. If I want to invest in copper, I can buy a copper derivative that is a pure play on the price, the spot trading price of copper. I don't have idiot management in the way of the price of the commodity and the play on the market, because what Quadra proved to everybody that owned the stock is management is weaker than the commodity price. They blew it. They just couldn't manage their way on costs and revenue and everything else. Who needs that exposure when copper is what you really want to invest in? Why invest in them at all?
Well, I'm not going to defend management, by the way. They're not friends or anything like that, but I will say mining is a difficult business. I mean,
so why not avoid it?
That's a fair point. So you could buy an ETF. There is a relatively large one looming on the horizon. It has yet to get SEC approval, coming out of the States, obviously, so that'll give you a way to play it. The answer probably has to do with the fact that you've got earnings leverage available in a mining company, and at a close of $4.40 a pound on copper today versus cash costs of $1.50, the earnings leverage is absolutely phenomenal. I mean, this company is literally gushing cash as we speak right now at these prices.
A lot of it's allocated, though, isn't it, to capital spending projects?
Only if they bring on this new Chilean mine, Sierra Gorda. We're going to get, that's another catalyst, in fact. You're going to get some news over the next 3 months, probably, on Sierra Gorda. If it's a go, if they have good partners on that or offtake agreements, you will see them start to spend some of their cash. But the stock's at $13.40 roughly, and there's $2.95 of net cash right now, and it is literally just minting cash at these copper prices today. But that's why you would want to own it instead of the copper. You get better leverage.
And you assume better management, too, if you have an investment thesis like that.
If they sort their problems and they start trading where the other 5 decent-sized names trade, then you've got upside to roughly a double from where it is today.
What happens to the flow of capital after the copper ETF gets established? Because GLD was a big surprise to everybody. Billions of dollars flow into the liquidity of that out of the names, because who wants the management risk? So that's going to put some downward pressure on these copper names, isn't it?
I think actually it's going to help, because you're now going to have even more competition for basic copper. So the price is probably going to go up. You've got 3 factors now that I think are underpinning copper in general. 1, you've got ETFs coming out. 2, you've got a merger underway. There's a contested merger between Lundin Mining, Inmet Mining, and Equinox Minerals. Who knows how that plays out, but that's going to take out one of the players. It's going to make somebody like Quadra even more attractive. And then sadly, you've got the Japanese reconstruction. They're going to consume a lot of copper over a certain amount of time to rebuild telephone lines and other infrastructure.
We keep referencing the guidance problems that they've had. Why did they keep missing their guidance, and what makes you think that they've got that solved?
I think mining is a tough business, in fairness, but in this case I think it was exacerbated by the fact that it was a recent merger and they took on a lot of new problems and projects all at the same time. We think, however, that the latest version of the guidance has been set at such a low level. I mean, we basically think the board has said to management, whatever you do, the new guidance has to be beat. And so our sense is this new guidance level, which is really baked into the stock today, is a very easy to achieve number.
So what I should be looking for this whole copper idea is continued increase in the price of the commodity. That rises all names, right? That's the key.
You know, if it just stays here, Quadra is going to make a fortune.
And you're not worried about the oversupply criticisms coming out of China? I mean, if they take 40% of the world's copper, that seems like a significant issue.
That's the big risk. And so we would advise maybe for half your position, consider shorting a basket of more expensive names. I mean, this one's an anomaly. It is literally trading at half the valuation today. And there's probably historically a tendency to, for these gaps to shrink.
Peter, thanks very much.
Thank you.
Time now for our priceless moment. Many Canadian young people can't decide what they want to do next week, let alone with the